Imagine this. You're sipping your morning coffee, checking your phone, and bam, there's extra cash deposited right into your account. No extra work, no side hustle, just money showing up because you own a piece of a company. Sounds like a dream, right? Well, that's the magic of dividends, and today on Money Spectrum, we re-diving deep into Dividends 101, how everyday people like you and me get paid just for holding onto stocks. If you've ever wondered how to turn your investments into a steady stream of passive income that keeps growing year after year, stick around because this is going to change the way you think about building real lasting wealth. And hey, if you're feeling that spark of excitement, already smash that like button right now and subscribe to Money Spectrum. We drop fresh, no-nonsense investing videos every week to help you take control of your money and build the future you deserve. All right, let's get into it with real energy. Picture yourself back as a kid running a lemonade stand. You squeeze those lemons, sell the cups, pocket some profit, and maybe even share a little with your buddies who help stir the mix. That's dividends in a nutshell. When you buy shares of a stock, you're not just betting on the price going up, you're becoming a part owner of an actual business. Companies like Coca-Cola, Procter & Gamble, or Johnson & Johnson generate billions in profits every year. After covering costs, paying employees, and reinvesting some back into growth, many of these rock-solid businesses decide to share the extra cash with shareholders. That share? It's called a dividend, a direct payment to you, the owner, just for holding the stock. It's not some gimmick. It's real money flowing into your brokerage account, often every 3 months without you lifting a finger. Why do companies bother paying dividends? Simple. It's smart business. Mature, profitable companies think those big, reliable blue chips don't need to plow every dollar back into explosive growth like young tech startups do. They've already built massive brands, efficient operations, and loyal customers. So instead of hoarding cash or wasting it on flashy projects, they reward loyal investors. This keeps shareholders happy, attracts more capital, and signals confidence in the future. Take Procter & Gamble for instance. They've paid dividends without a single miss for over 130 years since the late 1800s. Back then, they were selling soap and candles. Today, their products are in almost every home worldwide. That kind of track record isn't luck. As proof that dividends come from businesses built to last through wars, recessions, and everything in between. Stories like these fire me up because they show what's possible when you invest in quality. Now, let's make this super clear. There are different flavors of dividends. The classic is cash dividend, straight money wired to your account, usually quarterly. Own 200 shares of a stock paying $2 per share annually? That's $400 a year, split into 4 $100 payments. Then you have stock dividends, where the company issues extra shares instead of cash, your ownership grows automatically. Special dividends are the exciting one-offs. A company scores big, like from selling a business unit, and drops a bonus payout. Some stocks even pay monthly, which feels incredible for cash flow. The point is, all these put money back in your hands without forcing you to sell shares. Your original investment stays put, working hard while you collect the rewards. So, how much can you actually earn? It boils down to dividend yield, the annual dividend per share divided by the stock price, expressed as a percentage. A $100 stock paying $4 yearly dividends? That's a clean 4% yield. Right now, in early 2026, the S&P 500's average yield sits around 1.13% to 1.15%, but that's dragged down by low-yield growth stocks. Dividend-focused picks often deliver 3%, 4%, or even 5% plus. Look at Realty Income, the self-proclaimed monthly dividend company. They own thousands of retail properties and send checks every single month reliable, like clockwork. Or consider high-yield plays in sectors like energy or REITs that can push toward 5 to 6% or more safely. Imagine building a portfolio where $50,000 invested yields $2,000, $3,000 a year in dividends alone. That's freedom, extra vacations, helping family, or just peace of mind. Not every company pays dividends, and that's okay. Fast-growing tech names like Amazon or Tesla plow profits back into innovation, chasing massive future gains through stock price appreciation. But if you're after income you can count on, especially during market dips, dividend stocks shine. They tend to come from defensive sectors. Consumer staples like food and household goods, healthcare giants, utilities, and telecoms. These are steady Eddie businesses. People buy toothpaste, medicine, and electricity. no matter the economy. During the 2008 crash, the COVID panic, and other rough patches, many dividend payers kept sending checks while prices fell. That cushion is huge. It motivates you to stay invested long-term instead of panic selling. When the market recovers, your shares rebound and your dividends keep compounding. That's the kind of resilience that builds generational wealth. Let's talk real strategy, because knowledge without action is worthless. Start with the payout ratio. What percentage of earnings the company pays as dividends? Aim for 50 to 60%. It leaves room for growth and buffers tough years.
Over 80%到90%. Red flag.
It might not last if profits dip. Check this easily on Yahoo Finance, your broker's tools, or sites like dividend.com. Next, prioritize dividend growth. These are the Dividend Aristocrats S&P 500 companies that have raised dividends for at least 25 straight years. In 2026, there are around 69 of them, including legends like Coca-Cola, over 60 years of increases, Procter & Gamble, and Johnson & Johnson. These firms start with modest payouts but hike them consistently, often 5 to 10% annually. That growth beats inflation and supercharges your income over time. Compounding is where the real fire happens. Reinvest those dividends to buy more shares, and your income snowballs. Invest $10,000 in a 4% yield stock. Year 1, $400 back. Reinvest, now you own more shares, earning on a bigger base. Add average growth, and over 20 to 30 years, that could turn into tens of thousands in annual dividends without adding extra money. Warren Buffett built his empire this way. He loves reliable dividend growers. You don't need millions to start. Even $200 a month invested consistently can explode with time and patience. The motivation? Your future self thanking you for the discipline today. Of course, nothing's perfect. Dividends can get cut if a company struggles. Remember General Electric slashing theirs in 2018 after years of issues. That's why diversification is non-negotiable. Spread across 10 to 20 stocks or sectors. Use ETFs like the Vanguard Dividend Appreciation ETF, tracks growing payers, or the ProShares S&P 500 Dividend Aristocrats ETF for instant exposure. Taxes matter too in the US. Qualified dividends get favorable rates, 0 to 20% based on income, way better than ordinary income. Park them in a Roth IRA, and they grow tax-free. Smart planning like that amplifies everything. Getting started is easier than ever in 2026. Open a free brokerage account at Fidelity, Schwab, Vanguard, or even Robinhood. Research with free tools. Dividend.com for histories, seeking alpha for analysis, or just search Best Dividend Stocks 2026. Current hot picks include dividend kings like AbbVie, strong healthcare pipeline, Coca-Cola, steady consumer demand, Home Depot, housing rebound potential, and monthly payers like Realty Income. Look for strong balance sheets, low debt, and consistent earnings growth. Many offer DRIPs, dividend reinvestment plans, that auto-buy more shares commission-free. Start small, $500, $1,000, buy quality, reinvest, and add over time. Before long, your portfolio pays you to own it. As we near the end, let's get motivational. Picture your life 5, 10, 20 years from now. Dividends rolling in monthly or quarterly, covering bills, funding dreams, giving you freedom from the 9-to-5 grind if you want it. This isn't get rich quick. It's get rich smart, patient, and unstoppable. You've got the power right now to start building that stream. Anyone can do this with consistency and the right mindset. You've got this. Take that first step today. Thanks so much for watching Money Spectrum. If this fired you up, drop a comment below. What's your favorite dividend stock right now, or what's holding you back from starting? Share this video with a friend who needs that passive income push. We're building a community here. And if you haven't already, hit subscribe and turn on notifications so you never miss an update. Let's keep growing that wealth together. Keep investing smart. I'll see you in the next one.